Avani Bhatt, Senior Vice President at GM Financial. Good morning, Avni. Thank you for joining us here on News 9. Always a pleasure speaking to you. And Nifty, it has been broadly trading in this range of 21,500 to 22,100 for the past few sessions. I mean, if there is a breakout, which direction is the index more likely to go, and how much might it move? I mean, if you could give us some estimate in percentage terms.
Good morning, Suyash. Good morning, Amit, and a very good morning to all the viewers as well. Currently both Nifty and Bank Nifty are, they are stuck in a range. They are trapped in a range. The range being 21,700 for Nifty on the downside. This is as far as the closing basis is concerned. Even day before yesterday on Thursday also, Nifty did see a dip, but closed about 21,700. Friday also it closed about 21,700. And today it is trying to, sustain about 21,700. So on the downside, 21,700 on closing basis, or else if we look at the swings, then the Friday's low of 21,630 is an important level. But the all important level below which the trend reverses is 21,500 on the downside. So if at all it closes below 21,500, then we can say that for the temporary period, the bull run is done for now, and we may see some further downside. And on the higher side, again, we are seeing a lot of selling pressure around the 22,000 mark. The swings being up to somewhere around 22,100. But closing basis range currently is 21,700 to 22,000. And the broader range, if at all option writers have to consider a particular range, then 21,500 on the downside and 22,200 on the upside. This is the broader range for Nifty. Now, going ahead, where is the breakdown or breakout coming? So, most probably the kind of buying that we are looking from, especially from the domestic players, the mutual fund flows and all. I think this is a temporary consolidation phase. Eventually, we should be seeing a breakout about 22,000, 22,200 mark. And after that, the rally can continue up to say around 3 to 4%, which would be anywhere between 22,800. And similarly for Bank Nifty, it's weaker of the two indices. For Bank Nifty, 45,000 is a very crucial support level. And on the upside, 46,000 and 46,200. These are the two major levels. So we are looking at a move above 46,000 up to around 46,200. But by closing basis, it comes down to below 46,000. And similarly on the downside, 45,000. So this range play, I think it will consolidate, and this range play may go on for a couple of weeks more. And eventually we should be seeing Bank Nifty also cross 46,200 and move towards 47,000. So view is positive. It's a buy on dips market, and most probably the range breakout will be on the upside, and we should be seeing another 3 to 4% move after that happens.
All right, Nifty Bank, of course, we saw some bit of a pullback from the 200-day moving average, on Friday, and the index bounced back sharply. But this morning it's trading with a cut of about 0.4%. But PSU banks, they have of course outshined, and they have been outperforming. Even last week they were up. The entire PSU bank index was up somewhere around 5%. But State Bank of India, that is leading the way. The stock has rallied by about 12% in the last 5 sessions. Avni, what's your view on SBI? Is the tide finally turning in favor of SBI?
Definitely, Suyash. As you pointed out, SBI is the one PSU stock that has given a fantastic move in last week, the last entire week. But if you look at the consolidation that it has undergone, right from 15th of December till 5th of Feb, this consolidation has been pretty strong. And such consolidation phases are always good. And whenever the breakdown or a breakout happens, the eventual targets are also pretty high. Now, this is SBI has given a breakout above the consolidation range. The breakout that has occurred around the 660 mark, the upside targets are anywhere between 775 to 780 levels. So any dips in the stock, I think you should be using it as a buying opportunity. Even if you look at the options data, there's a huge amount of build-up that has happened at 700, 710 and 720 puts on Friday. And this is a very good put writing is always a very good sign as far as the underlying trend is concerned for the stock. So we are looking at around 780 to 800 targets. Obviously not in a very short time, but eventually in probably if you have a perspective of around 2 to 3 months, we should be seeing these levels. So it's a buy on dips stock that now the scenario that it is showing.
Good morning, Avani. Another company that declared its results was Tata Power. Now, it's very muted results. Net profits up only 2%, revenues up only 6.2%, even though high growth in EBITDA, about 20%. Is this muted growth because of the new projects in Tata Power Solar and Tata Power Renewable Energy that will basically be up to taking its capacity up to 10,000 megawatts in clean energy? Is it that because this is a stock that has given up to 85% returns in the last 1 year, over 60% in the last 6 months, but last 5 days it has been down. Today it is down 4.46%. Last 5 days it has been down almost 3.7%. What do you make of Tata Power? Is it just a small hiccup in the way because of the costs that they are incurring due to these new executions?
Amit, so as you pointed out, it has given fantastic results in last 2 months, and I think it is time for this stock also to consolidate to see some profit booking and cool off in the current uptrend. So I think for the next 1 month or so, it should consolidate in the range of around 350 on the downside, and it is going to take time to come back to its all-time high levels around the 400 mark. And consolidation should continue for at least 1.5 months. Nothing wrong in the company. Expectations, were not met, and that is the reason we are seeing some profit booking in the stock. And this may lead the stock to around 350 on the downside. That should be a good level to enter again.
Hi Avni, the other company is ONGC, which posted its results, and their profits and revenues were down. How does one look at that stock?
So yeah, ONGC EBITDA was slightly lower, but the PAT was in line with the expectation. And see, moreover, it's a robust dividend play. So that's a good part of ONGC. And in the short-term moving averages, if you technically look at the stock, the short-term moving averages confluence in the area of around 256 to 258. So we are looking at some profit booking in the stock. 256 to 258 is a good support area, and eventually the stock should resume the rally and move up towards around 285 to 300 on the upside. In fact, the stock after today's cut, it's there in my buying radar also, and we'll be considering buying the stock around the current levels of around 260. So the view is positive on the stock.
Okay, so and what are your picks for the investors today?
Today again now today mostly these are all technical picks, and also I'm going to give you the long-term targets for these stocks because most of them have given good breakouts. My first stock would be Bharat Forge. One can enter in the region of 1305 to 1310. On the upside, the targets are 1388, which is the trading target, and 1465 is the positional target for the stock. One can keep a stop loss of 1270. So huge unwinding has been seen in 1300 call, and also there is a very good addition at 1300 put. So I think this is a very positive sign for the stock. We'll be targeting 1465 on the upside on positional basis and 1388 on trading basis. The second stock is Adani Ports. Adani Ports has seen multiple strikes and calls have seen unwinding, right from 1250 call to 1400 call. So this is a clear sign that the call writers are exiting their positions and there is further upside in the stock. So in the region of 1250 to 1260, one can enter into the stock for a trading target of 1325 and a positional target of 1390, and keeping a stop loss of 1210. The third stock, which is the favorite of all, is Reliance. So Reliance has formed a very good base at 2900, and also put writing has picked up at 2900. In fact, for the February series, the highest OI is at 2900. So one can enter into the stock in the region of 2900 to 2920 for a target of 3000 and keeping a stop loss of 2840. The third stock is ACC. ACC on Friday has given a clear breakout above the consolidation range, and put writing has picked up at 2600 put. So one can enter into this stock with a positive view in the region of 2600 to 2620, targeting 2765 and keeping a stop loss of 2540. And lastly, as we already discussed, ONGC is in my buying list for a target of 290 to 300. We'll be keeping a stop loss of 258. In fact, 256 to 258, this is the area where the support is. So if one considers keeping a slightly larger stop loss, it's even better. But from a trading perspective, one can keep a stop loss of 258.
All right, those are the short-term stock calls from Avani Bhatt. Ma'am, always a pleasure speaking to you. Thank you for joining us here on News 9.